Hey guys, welcome back to Snowball Investing. This is going to be the August Freetrade and Vanguard portfolio update. As I do in all my videos, I'll show you my current positions. They are performing very well in the last month. I've been buying some stuff, I've been selling some stuff, so I'll be walking through all of that in today's episode. Before I jump into the stocks and shares ISA, I do want to thank all my new subscribers. So I've now passed 300, which is absolutely amazing. So if you like this video and you're not yet subscribed, please consider subscribing as it really helps grow the channel. The value of the stocks and shares ISA sits at £62,605 and the overall portfolio is up by 15,941, which is around 6,000 more than it was up last month. As you can see from the monthly chart, it's been a nice steady rise up, hitting around the peak of 67,000, but we've had a small, probably healthy pullback in the last couple of days, bringing it down to around £62,000. What I like to do is compare my portfolio performance to the FTSE All-World ETF, just to see if I would have been better off buying a simple ETF. As you can see in the last month, my portfolio is up by a healthy 11.33%, with the FTSE All-World ETF is up by 1.23%. And looking at the sort of maximum time horizon, the portfolio is performing extremely well actually. So it's up by a massive 31%, where the FTSE All-World ETF is actually down by 0.18. So what's the main driver behind all that performance? The majority of it is probably Palantir. So Palantir is my biggest position and it's growing into quite a outsized one now. So the value of that now sits at £32,795 and is up by 79.5%. It continues to have a very, very nice rise up in price. So if we look at the monthly chart, around a month ago it was trading around $15, reached a peak actually over $20 and has a recent pullback down to around $18. So what's the reason behind the massive price increase? Number one is probably there is continued hype around AI in the market. And the second is probably Dan Ives has a price prediction out for Palantir of $25. And after that, that price did jump up quite a bit. So the price of Palantir at the minute, in my opinion, is getting to the overvalued territory. I'm absolutely not buying this company at this price. I was buying very heavily at the $6 to $10 range. At that range, I thought it was undervalued. But where it is now, based on its current growth rates, I think it is overvalued. But we will have to see because earnings are on the 7th of August. And that's going to really show us if the AI hype is actually hype or there are numbers behind the growth and the potential benefits of AI for Palantir. So at $20, I was actually contemplating taking some profits off the table. But when I bought this stock initially, I was actually buying it with the mindset that I'm going to hold it till at least 2030. It's a growth stock, it's going to be volatile, and I really do not like to play earnings. I have no idea what Palantir earnings is going to be like. Hopefully they have some very good numbers, but we shall see. So until then, I'm just going to hold it. If it drops back to the $10 range, I might buy some more. But until then, I'm going to enjoy my £14,525 unrealized gains and just let this ride and see where this goes in the next 5 to 10 years. Next up, we have the FTSE All-World ETF sitting at £6,414 and is up by 5.86%. Then we have SoFi sitting at a very nice gain of plus 32%. So SoFi had their earnings earlier this week, and as they usually do, they beat everything. SoFi is an absolute beast of a company, and I think Anthony Noto as the CEO is one of the best CEOs around, so I'm extremely bullish on this company. At the current prices, I'm not buying. I think the time to buy was when it was in the $4 to $6 range, but it does fluctuate in price, and I think there may be opportunities to buy some more of this later down the line, but for the minute, it's just a hold. We have Nasdaq at plus 688%. Meta still doing and holding up very well. So that's sitting at 1,594 and is up by 55%. Tesla also doing well, plus 12.85%. The next position, which has now overtaken Google and Microsoft, is SL Green Realty. So this is up by 56%. And the great thing about this, it gives a massive dividend. So every single month I get between £6 to £7 of just holding this stock. And that's the beauty of buying dividend stocks at very undervalued prices. You get both capital appreciation and a very nice dividend. And this is one of the things I'm learning as part of my investing journey. And I've only been investing for a year and a half, so take everything I say with a pinch of salt. But I tend to buy companies that are undervalued at a point in time. I'm not married to any stocks, whether they're growth, whether they're dividend. I'm happy to have a combination of all of them, but it's just buying stocks when they're undervalued, where I know over the long term, whether that's 5 years or 10 years, I know they're going to go up based on their fundamentals and their potential future trajectories. Next up, we have Google, which also had a very good earnings in my opinion, very solid numbers, up plus 5.18%. Microsoft equally had very good earnings, that's up plus 18%. I think Microsoft went into earnings quite richly valued, so that's probably why it had a bit of a pullback after earnings, but overall, very happy with the performance of those two stocks. A company which didn't have as good earnings was PayPal, so they came in within expectations, but there was a decrease in net new accounts which the market was not expecting. So after the stock price tanked after earnings, I did actually dollar cost average into this position. I still think it's a very good quality stock. They are doing an insane amount of share buybacks, which I love to see, but I would say I'm cautiously optimistic about PayPal. I don't see it being a huge position in my portfolio like Palantir, although I am willing to have a good position of it and continue to dollar cost average in if the price continues to decrease. Truist is sitting at a value of £984 and is kind of remaining steady in terms of share price. DraftKings, again, an amazing earnings, continues to grow quite rapidly. I mean, this is up nearly 100% at one point, which is very nice to see. But at the minute, it's sitting at plus 88% at a total value of £898. IUKP is sitting at £729. I continue to very slowly dollar cost average into this. Gives a pretty good dividend around 5%. I think there's a lot more pain in the UK market. Economy is not as good as the US, so I think there is more pain to come, but I really can't time the bottom with any of these stocks. So plan with this and even Persimmon is just to slowly dollar cost average in when the price dips. Ginkgo Bioworks has had quite a good recovery, so that's up 1.6%, showing the market is being a bit more risk on. AMD up 24%, Persimmon, again dollar cost averaging, or I should say pound cost averaging into this, sitting at plus 3.58%. And then you have some of the smaller positions which a lot more red, and I'm happy the smaller positions are in the red rather than the very large ones, but some of those I'm not really buying at the minute. So that concludes the stocks and shares ISA. My approach for the next couple of months is the fact that the market's had a pretty insane bull market since the start of the year. I think the market is due a very healthy 5 to 10% pullback. Again, not financial advice, cannot predict that, but things don't go up in a straight line. So I'm expecting a bit of a pullback, and because of that, I have been saving some cash. So I've got around 5,300 sitting in cash. So I'll be looking for some opportunities out there in the market. And again, with my approach, really trying to buy these stocks when the price is low, when they're undervalued, rather than buying into the hype and buying stocks when they're actually overvalued. So moving on to the general investment account, the value of this sits at £14,092, and this one is up by £2,392. Looking at the performance of this account in last month, it is up by 3.5%, outperforming the ETF at 1.23%, and on a maximum time horizon, portfolios again doing very, very well at plus 24%, while the FTSE All ETF is down by 0.18. The biggest position in this portfolio is Meta, sitting at £3,957 and is up 93%, although at one point it was up 100%, which is very nice to see. And second biggest is Google, and that sits at £3,314, which is up 10.68%. Amazon actually had a very good earnings, and that's why it was up over actually 8% on Friday. So this position now sits at 1,935 and is at a gain of plus 28%. The only position I've bought in the last month is actually Enphase Energy. So after the dump that this stock took after earnings, I actually bought quite heavily into this. So this is sitting at now £1,021. One of the reasons this took a dump was earnings wasn't as good as expected. Given the current market conditions and especially the interest rates, solar is going to take a hit. But over the long term, once interest rates go back down, I think this is going to continue to be that growth story. So at the minute, I think some of that is being priced into the stock price, but over the long term, 5 to 10 years, my personal view is this is going to go up in price. But let's see what happens with the share price. If it continues to tank, I'm going to increase this position, but it is a hold for the long term. Some of these other positions are in my eyes also. So you've got Microsoft at plus 20%. We've got Intel, which is down by 1.48. Starbucks, that's up by 23.52%. The NEO has actually had a pretty good recovery in the last month. So it was up 50%, although my overall position is still down 30%. You've got JP Morgan up 26%, and Rocket Labs continuing to hold strong at plus 67%, even though it's quite a small position in my general investment account. You may notice a stock is missing in this portfolio, and that is Oatly. So I actually sold Oatly at a loss after their earnings. They did miss revenue, and I thought it was time to just cut my losses and put my money elsewhere, which was Enphase. As I get into this investment journey, I think this is one of the things I'm learning. Do not buy stocks that are junk. I think it's okay to have a couple of positions that are speculative. For example, NEO and Ginkgo Bioworks and a bit of Rocket Labs. But I think the overall position should be in very good quality stocks. So it's a lesson to be learned, but I've taken a small loss on that and redeploy that capital in a better quality company. So that concludes the GIA. So let's move over to the Vanguard account. Looking at the Vanguard general account, the value of this sits at £11,547, and it's up by 18.06%. I do have around £600 in cash. I should probably look to put that back into the Avusa, which is the S&P 500. I'm probably going to wait for the S&P to take a bit of a pullback, and I'll deploy that cash, but nothing much to report on this account. I simply put £200 into the S&P 500 every single month and just let it compound. So that concludes the August portfolio update. It's been a very good couple of months and it looks amazing on these YouTube videos, but ultimately my goal is to be a long-term investor. I'm investing for my future, which is 10-20 years. So I do hope we have a bit of a pullback. I've got cash on the side. I've got cash I want to invest. So hopefully I can pick up some more shares at lower prices. But I'm happy with the way things are going at the minute. So thank you very much for watching. Hopefully that's been entertaining, and see you in the next month's update.